Hello traders, and welcome back to the Forex Geek. In today's video we'll be discussing yet another powerful tool that can help you make more informed trading decisions. Today we'll be talking about the Camarilla Pivot Points. So if you've ever struggled with identifying key support and resistance levels or finding the right entry and exit points, this is a strategy you would want to pay attention to. So by the end of this video, you will understand how Camarilla pivot points work, how they differ from traditional pivot points, and how you can use them to improve your trading performance. So stick around to the end so you don't miss any crucial tip that could take your Forex trading to the next level. So let's get started. This is the TradingView platform, and this is GBP USD on the 1 hour time frame. I'm just going to put the pivot points, Camarilla pivot points indicator on our charts. So I'm just gonna edit this, set it to Camarilla, set it to daily, and also I'm gonna edit the colors so that we can see them clearly. I put it to black. And I'm gonna explain what this S1, S2, S3 means, the R1, R2, R3. I'm gonna explain it all. Also, I'm gonna remove exactly. Now this is your Camarilla pivot points. So Camarilla pivot points are a set of technical levels which traders use to identify potential support and resistance areas in the market. These levels are calculated using the previous day's high, low, and close prices. So unlike traditional pivot points, which are more straightforward, Camarilla pivot points offer a more precise way to gauge where price reversals or breakouts might occur during the trading day. So the Camarilla method was developed in 1989 by a trader named Nick Scott. It's based on the idea that markets tend to revert to their mean, meaning prices will often return to a central point after moving too far in one direction. So you typically see 8 key levels in Camarilla pivots: 4 resistance levels, the R1, the R2, the R3, and the R4, and 4 support levels, the S1, S2, S3, and S4. You can see them on the chart. For each trading day, we have these levels. These are resistance and support levels. So the R4, R3, R2, R1, S1, S2, S3, and S4. And then we have the central pivot point, which is that the one in the orange line. Yeah. So these levels act as boundaries for price movements. For example, if the price approaches S3 or R3, it's often seen as an opportunity for a reversal trade. On the other hand, when price breaks through R4 or S4, it can signal a strong continuation in that direction. So we're going to talk about all of that in details and show you in the charts. But to sum it up, the Camarilla pivot points give you a more detailed framework for understanding where price might move to next. So you can use these levels to plan your trades with greater precision. So let's look at how to use the Camarilla pivot points in trading. The most important levels to focus on, like I said, are the R3, R4, and S3 and the S4. So these are levels where the most significant price movements typically occur. So let's break down 2 common strategies you can use with Camarilla pivot points. We have the first one, which is the mean reversion trades. So a mean reversion trade is when you expect the price to reverse direction after reaching a certain level. With Camarilla pivot points, R3 and S3 are often considered strong reversal points. So if the price approaches S3, this is typically seen as a potential buying opportunity, as the market might be oversold and could reverse upwards. Similarly, if the price nears R3, this can be a selling opportunity, as the market might be overbought and could reverse downwards. So for example, let's hop on the chart. But R3 is not a rule of thumb. R3 and S3, its price also reacts to R1, R2 and R3, and also the S1, S2 and S3. But when price reacts from R3, it's actually very valid, like, because that also corresponds with some Fibonacci ratios. So looking at this, you can see price here we had the breakout, so we're going to talk about that later. You can see this reversion to the mean for this trading day. You can see price reversing to the R1 level to continue the downtrend, and this was this day was a range bound day, so we didn't have much. So we didn't have much, and you can see this day, for this particular day, price got to the R2 level and the central pivot level, which is the mean reversion strategy. Price gets to revert to the mean to give us a continuation to the downside. For example, you can see this day, on this day, price reacted to the R3 about twice, giving us something like a double top pattern and a push to the downside. But the main thing is that price reacted from the R3 level, which is the resistance level, and you can see price continuing to give us a push to the downside. See price reacting from the R1 level right here to give us a push to the downside. So price typically reverts to mean levels when using the Camarilla Pivot Points. So the next strategy is the breakout trades. Just gonna use this to explain breakout trades. Breakout trades occur when the price breaks through a key level and continues in that direction with momentum. In this case, you want to focus on R4 and S4, which are the outermost resistance and support levels. So if the price breaks above R4, it signals strong bullish momentum and you might want to enter a long position. Conversely, if the price breaks below the S4, it indicates bearish momentum, making it a good opportunity for a short trade. So you can see this example here. Price broke below S4, gave us a pullback, and this is a good reaction from this support tone resistance here. You can see it corresponds with the support tone resistance and the S3 level toned resistance also to give us this push to the downside. And you can see this support tone resistance that I mentioned. You can see that to give us this is the breakout trade strategy. And let me look for another one. Okay, this is another one right here. You can see price broke to the upside, had this retest at the R3 R2 level, which is now support, and it has a continuation to the upside. So that is how you can use the breakout trade strategy with the Camarilla Pivot Points. So this is another one that happened right here. You can see this price just wicked below S4, give us a retest, and another confirmation right here for this push to the downside. And that is basically how you can use the breakout trade strategy. This is another one. Price broke below the S4, as you can see on this day. This was 15th, this was Friday. I had the retest and the push to the downside. So that is one way you can use the breakout trade strategy with the Camarilla Pivot Points. Alright traders, I hope we've been able to cover a whole lot and you understand what the Camarilla Pivot Points is. If you found this video helpful, make sure to give it a like, subscribe to the channel and turn on the notification bell so you don't miss any future updates. Thanks for watching and happy trading.